What's going on, everybody? It's Christian from Stock Hours, and today's video is going to be a big one. It's about the big debate between fundamental traders and technical traders in the stock market. So I'll just jump into it. The first set of people, market participants in the market, are going to be fundamental analysis traders. These are going to be traders that use earnings reports, news releases, economic factors, company guidance, companies' competition, people in the sector, things like that, to make decisions based off of how they want to position themselves in the market. So let's say if somebody's investing in Tesla, for example, every time Tesla has an earnings report, a fundamental trader is going to have to read that earnings report and know what their numbers are, know how their numbers have changed over the last couple quarters to make a decision on how they want to position themselves in that stock, whether they want to maybe add to their position, sell some shares, or stay the same. Now, the other factors are going to be news, for example. So let's say Elon Musk comes out on Twitter or X now and announces that the Roadster is finally going to be available for sale. That's obviously going to affect how Tesla stock is going to perform. So fundamental traders are going to make a decision based off of that news. Now, there are going to be a bunch of other fundamental factors that are going to affect how a fundamental trader is going to react to the market and position themselves in the market. So these are just some examples of what they might look at. Now, typically, if you're a fundamental trader, you're in trades for a longer period of time. A lot of fundamental traders look for value stocks. So they want to buy when a stock is cheap, sell when the stock is expensive relatively. So let's say NVIDIA, for example. NVIDIA obviously had a huge jump within the last year, but value investors, fundamental analysis investors, knew that NVIDIA was at a good value, let's say a year ago during COVID or whatever. So they bought up then. They saw it gets overextended. Now it's a top 5 market cap stock in the world. So they might start getting off their shares here. That's just one example of how a value investor might approach the market. Now, another view of the market from a fundamental analysis standpoint could be a dividend investor. So this is somebody who is just in the market for a very long time. They just hold stocks, use the dividends as passive income, or use the dividends to continue growing their position size. These are just some examples of how fundamental analysis traders approach the stock market. Now, on the flip side, technical analysis is going to be much different. News, company guidance, earnings reports, economic factors, those don't really matter as a technical analysis trader. What matters is going to be the stock chart, the patterns that the stock chart shows you, trends, what some indicators might tell you. These are some factors that technical analysis traders are going to look at. So it's far different than what a fundamental analysis trader looks at. Fundamentals, they look at underlying value of the stock. Technical analysis traders just look at patterns, probabilities, momentum, volume to see and predict based off of the chart what the stock might do next. Versus a fundamental is going to look at the longer term picture. They're going to see in 5 years and 10 years, where can this stock potentially be? So technical traders are more of an active investing style of trader. So you have to constantly monitor your position, manage your positions. Even if you're a swing trader, you're still looking at the charts every day just to see where your stock is, to see how your stock is performing, how your trade is performing, or even before a trade, if a trade is setting up, you want to obviously look at it often to know where you should get in, where you should get out. If you're 5 minutes late sometimes, you would have missed the whole entire move. In my example specifically, so I'm a technical analysis trader. Most of my trades are under 5 minutes long. So imagine if I was 5 minutes late, I would have missed the entire trade. Another thing with technical analysis Typically, since it's shorter term moves, most people go in with a higher position size to capitalize on that shorter term move, or they'll trade it in a more leveraged way. For example, I trade options. So options are going to be much more leveraged than if you were just to hold shares long term. So if I catch a $1 move on Tesla, it's obviously going to pay less than 1% if I was just holding shares. Versus if I have an option, that can pay 10%, maybe even more, depending on the day of the week. So that's another thing you want to consider when trying to figure out what style of trading is going to be best for you. So here are going to be some approaches to the fundamental trading. Just some examples. There's obviously a lot, but these are just the first ones that came to mind for me. So let's say you are investing in your retirement account. One thing you might do is dollar cost average your way into a stock. So what I mean by that is just buying whatever, $100 worth every week, $100 worth every month, buying one share every month. Whatever the case is, just dollar cost averaging, buying a little bit consistently. This way you have a good average. Whether the stock goes up, whether the stock goes down, you can still capitalize on it because you're building to your overall position size. So instead of, let's say you have $10,000, instead of going all in once, you might put $1,000 every month for 10 months. This way, if the stock drops, you can get a better, average. If the stock goes up, at least you got in before. This way, you can just still continue to build out your position and lower your risk on that. Another style of fundamental trading, like I said before, is dividend investing. So this is just looking for a passive income source or just looking to continually grow your position size. So if you have 10 shares, just for easy numbers, let's say you have 10 shares and the stock gives a 10% dividend. No stock gives a 10% dividend, just for example. Then after the first year, you'll be able to buy one more share of that stock through your dividends. And then when you continue to compound grow that, it's going to end up being a lot more. So that's another style of fundamental trading. I guess I kind of just talked about this, but a retirement fund is just something safe. You invest in safe stocks. You might just invest in SPY, the S&P 500, basically, just to kind of hedge inflation, make sure that when you retire, you have a good, little stack of cash to sit on, just in case if anything goes wrong. And another important thing with fundamental trading and positioning yourself in the market is going to be diversification. So if you're, for example, let's say you're investing in your retirement fund, you're not going to go all in on one stock. Even though, yes, one stock might perform very well, there's a lot of risk doing that. Imagine if you all went all in on whatever, Moderna or Zoom or something like that. Obviously, it wouldn't have went too well for you. It might have been very hot for a short amount of time. Market conditions changed. Now you lost 80% of your position. So that's something to think about if you're fundamental trading in a longer term view is going to be diversification. Just to mitigate some risk, expose yourself to different sectors in the market. This way, when one sector's hot, you can capitalize on that. Start to value buy on the slower sectors, waiting for that to also have its hot moments. Here are going to be some approaches to technical trading. And like I said, these are two very different styles of trading, but we both use the same instruments. Both trade stocks, shares, options, whatever the case is. So there's two main sections of technical trading. It's going to be day trading and swing trading. So day trading is when you hold a position intraday. It could be just for a couple minutes, could be for a couple hours, but as long as you close that position the same day you opened it, that is considered a day trade. A swing trade, on the other hand, can still use technical analysis. They could still be looking at charts, but that's when you hold a position overnight. So you can be in a swing trade for weeks at a time using technical analysis, thinking, okay, the stock is overextended, let me buy puts, or the stock is a good value, it's going to bounce here, let me buy calls. something like that. They might even short puts, short calls, whatever the case is. Everybody's style is a little bit different. But the main takeaway behind every single style is that they're reading candlesticks, they're looking at chart patterns, they're looking at trends, they're looking at volume, they're looking at supply and demand, things like that are what technical traders do. They're looking at visuals to help inform their decision of what the stock is going to do next. We're not necessarily looking at the news that's coming out. Like, yes, it does have a factor, but it's not the main factor. We're not looking at earnings reports, numbers, things like that. It's a little different. It might help inform our decision, but it's not going to drive the entire decision. Here are just some examples of things you might use to develop a trading style. You might look at support and resistance. You might be a breakout trader. You might be a reversal trader. You might use divergence. You might do like iron butterflies and all that stuff. I don't know too much about that specifically, but there's a ton of different trading styles for technical analysis. So look into it, see which one is going to suit you best. Now, there are going to be some benefits to fundamental trading that won't apply to technical trading, and then I'll also get to the benefits of technical trading next. So for fundamental trading, this is a longer term view of the stock market. So when people say hold stocks over the long term, you'll make money, it's better than holding cash, this is what they're talking about. So over time, as long as you're investing in good companies, good sectors, or if you're just investing in the overall market, it's going to go up over time. You might have a red year, you might have 2 years that are red in a row. But if you just hold that, buy when it's at a good value, over time, stocks go up consistently. Look at a 30-year chart, look at a 50-year chart. It just consistently goes up. There's going to be some volatility, but that volatility might just be an opportunity to have a good dollar cost average buy to add to your position. So that's another thing to think about. Fundamental trading is also very low stress because you're not looking for such a precise entry and exit. It's very passive. You might look at what your position is once a month, if even that. Some people literally just buy, don't even look at how much they have. They just buy $100 every week or $100 every month, just for example. So it's very low stress. You just kind of let the market do what it does. And that's basically as simple as that. This is a reliable way to grow a portfolio. It's not going to be the most intense growth, but it will be pretty consistent as long as you're doing it the right way. So on average, I believe the market returns 8 to 10% a year. Obviously on average. So some years might be higher, some years might even be red. But on average, you will consistently grow your portfolio. Another benefit of this is that you can get passive income with dividend stocks, dividend investments. It's not going to be the biggest passive income, but it is something. It's something that technical trading does not offer. That's all active trading. This can be passive. If you get a 5% dividend on a retirement account, it can definitely help you out. And when you're fundamental trading over longer term trades, you're going to have better tax advantages than if you're day trading or swing trading over a short amount of time. So that's another thing to think about. Now, here are going to be some of the benefits of technical trading. It's going to be, obviously, like I said, much different than the fundamental trading. So with technical trading, you can capitalize on very short-term volatility. So like I said before, my trades on average are less than 5 minutes long. And some trades I make 10, 20, 30, 40% returns. So you can really capitalize on that very short-term volatility. Literally within a couple minutes, you can make what you would make on average in a year on the overall market. So with that being said, there's high growth potential with the leverage position sizing or leveraged instruments that you trade. So I trade options. It's like a little more leverage than just shares. But on the flip side, it is much higher risk. So you have to definitely factor that into your decision making of whether you want to be a fundamental trader or a technical trader, is knowing the risks associated with both of them. Another benefit, you don't have to really know the earnings numbers, economic news, market factors, company guidance, things like that. I'll be honest, for me, I don't know any company's earnings numbers. I don't know any company's guidance. I Unless if it's huge news, I don't really know about it, but I can still capitalize on those very short term moves. So that's a benefit for me. I don't have to spend too much time really breaking down what the earnings report said and what the CEO of the company said, and things like that. I don't really have to break that down too much. So that's a benefit for me. There's less time investment in understanding the company's fundamentals. And another huge benefit of technical trading is that you can profit when the market is going up or if the market's going down. So for me, I trade options. So if the market's dropping and I play puts, I'm still going to make money. Versus most of the time, if you're fundamental trading and you're just holding a retirement account, just longer term shares, when the market goes down, you obviously lose money. So this is different with technical trading. You can make money if it goes up or down. So that's a huge benefit in my book. Now, this is going to be the big question. Which one is for you? No, not one. Like, one is not better than the other. It's only better because you will treat it better. You will execute on it better. So not everybody's going to be the best fundamental trader. Not everybody is going to be the best technical trader. So understanding yourself, your goals, your personality is going to tell you exactly what's going to work best for you. So are you in tune with economic news and market news? That's the first question. If you are, fundamental trading might be something to think about. Do you have a long-term vision of companies and sectors within the stock market? If you do, and you understand, key things within that, within those companies or those sectors, you might have an edge in the fundamental side of trading. Now, on the flip side, are you disciplined? Are you systematic? Are you emotional? Are you patient? Do you have good risk tolerance? These are questions you want to ask yourself before you get into technical trading. Depending on your answers to those questions are going to tell you if technical trading is going to work for you or not. And the big question, do you have time to sit in front of the charts? If you work 9 to 5 every single day, you're not going to have time to day trade. I'll be honest with you. It's going to be very hard unless if you can get a break. It's going to be a little hard because at least my style of trading, you have to be very focused. You have to look at a bunch of different things at the same time. If you don't have the luxury of doing that, fundamental trading might be better for you, unless if you can work around 30 minutes, an hour a day just to focus on the charts, do the rest of whatever it is you're doing for the rest of the day. How to be successful. No matter what style of trading you pick, the first thing is going to be choose your style of trading based off of your goals and your personality type. That's going to be the big key to being successful, is picking the right style for you. Everybody's a little bit different, so I can't say one is better than the other. For a specific person, one is going to be better than the other. So identifying which one's going to be best for you is going to be the biggest thing for being successful. Now, once you've identified what style of trading is going to be best for you, focus on education in the beginning. Educate yourself about the different factors that are going to lead you to success. Learn from mentors, learn from people that have been in the business for a while and that have proven their success. Follow their footsteps, and then you're already on the right track to being successful because you've invested in yourself. This way you're more confident in your decision making, your execution, and how to approach the market. And the very last thing, I would just say start small, no matter what it is. You just want to prove to yourself that you can do it, that you can be consistent. Plus, when you start small, You're not starting off with crazy amount of risk. I've said my story before, but I started with way too much money, lost almost all of it. So if I were to just start small, I would be able to focus on the education and not be too emotional about it. Obviously, when you go in with a lot of money and you lose almost all of it, it's going to start to, hurt a little bit. So if you just start small, you're focused on the process, you prove to yourself that you can do it. After you prove to yourself that you can do it, you're already on the track of growing your account. So you just consistently grow your account and you're off to the races. But that's basically it between fundamental and technical trading. There's no right way or wrong way of approaching the market. Everybody's a little bit different. Knowing what works for you is going to be the key to identifying what's going to be right and what's going to be wrong for you specifically. So let me know what style of trading you guys do. Maybe you do both. There's a lot of people that have long-term shares, and then a lot of people, or the same people, day trade on the side just for extra, little growth in their account. So let me know what style works best for you, or if you do both, in the comment section below. And make sure you guys leave a like and subscribe. I'll see you guys soon. Peace.